We are back on Morning Line. Nick Barris here along with Christie Wilson. Remind folks who you work for, what you do, and your background.
Sure. Our company is the Wilson Group Real Estate Services, and we are located, we have two locations, one in Sylvan Park, one in Green Hills. We work all of Nashville and the greater Nashville area, and we are a full-service real estate firm offering all residential services, whether you want to buy, sell, or invest, as well as a commercial division and a full-service property management division. So we do it all.
And you're kind of the CEO, right?
I am, CEO and owner.
Yeah, and you took over this business from your father, really, who started it, which
11 years ago.
Yeah, and he had been in it for years.
Dad started in 1968.
That's what I'm saying.
Right.
Your family and your lineage, you know more about this area than just about anyone else. Do you yourself still handle a lot of clients, or are you more managing the business more?
I do both. I don't sell near as much as I used to. I have a wonderful realtor partner that I work with, and then we have 50 agents at the Wilson Group. So any one of my agents can help me, and when I'm working with buyers and sellers. And if I have special buyers and sellers, I want to work with them myself. My long-term clients. I'm so lucky that I love every aspect of real estate.
Including the calls in the middle of the night?
You don't really get that much anymore, but that's because I don't sell as much as I used to.
But aren't you on call, when you were, aren't you on call pretty much 24/7, which makes sense. If a buyer is really, I want to go see this, or you want to do it to make the sale.
We've written offers at 10, 11 o'clock at night. We're negotiating stuff. You're on a deadline. It's a deadline business. Yeah. So you're constantly in motion. Yeah. But it's not quite as crazy as it seemed to used to be, and maybe because you can turn your cell phone off. But back in the day when we had house phones, and people would call you at night on your house phone, you know, you just couldn't get away.
Exactly. You had to have that on. Now you can get text messages or whatever. All right. So yeah, you love the biz, every aspect of it.
I do. Now what I don't love is when there are unscrupulous people buying. Okay. And we have had a glut in Nashville. I feel like people, I'm dealing with one right now. The seller, I represent the seller, wonderful, wonderful person. And we have a buyer who no more pays attention to the contract, to deadlines, to anything. And I'm just, you just get so frustrated.
From in town, or these folks that are looking for investments?
This is investment. This particular one lives in Nashville, but is not from Nashville. They're currently living in Nashville.
Because didn't you tell me, and maybe it's tapered down a bit, you would get calls at your agency from investment groups from California or whatever, saying, look, we're looking to buy a swath of
100 properties. 100
properties, and you kind of start laughing, saying, good luck with that. That's not happening. But that's what they would do. The idea is, and I don't know if a lot of viewers realize this, investors from outside realize, all right, Nashville's a hot place, place to make money. Let's go in there, ask Christie if she can find us 100 properties. They buy those up, and then one by one, they sell them off at a profit.
No, they rent. They hold them and rent them. Oh, they hold them and rent them. So that became, and still is, a little bit of a problem because they're buying that first-time home buyer house. Yeah. So it's putting a lot of these first-time home buyers where they can't buy anything in a first-time home buyer price point. Okay. Right. So let's say a first-time home buyer price point is under $250. Okay. Those get scooped up quickly by investors, and it's hard for a first-time home buyer getting an FHA loan to compete with an investor coming in all cash, close whenever the seller wants to close. You know,
the seller's going to go that route. I mean, just because it's easier. Right.
So that's another good thing I feel with the market stabilizing, where a buyer might have a chance now to get that house. Okay. I just think where our market is going right now is such a positive, and you can't be crazy forever. Nashville was the it city in 2013. 5 years ago, we were named the IT City. And we are still a hot, hot, hot city. I don't see that changing. I mean, look at everything we have to offer.
So you don't see something, I mean, you make a good point that eventually everything kind of slows down. But if you're in a home and you're thinking of selling, it's like if for some reason you don't get around to it for a year or two, in the Middle Tennessee area, the market will still be strong 2 years from now?
I think so. I think we're strong, gosh, for another 10 years.
What about interest rates? Is that an issue? If you're thinking?
Great question, because a lot of people are talking about that right now. Interest rates have inched up. They're under 5% for a 30-year fixed rate. Yeah, which is still a good rate for those of us who remember what it once was. Yeah. And but they are inching up. I mean, from gosh, 2006 or 7 until the beginning of this year, we've been in the high 3s to mid 4s. Right. So we've been at ridiculously low interest rates. That became the new normal. And so the fact that they're inching up is that's just a normal business cycle too. Okay. So nothing scary. It's not as if they jumped up to 7 or 8%.
Okay. Well, the numbers, I'm sorry, I keep talking to her because I'm fascinated by what she has to say, but 737-7587. You guys can jump in if you'd like. Questions or comments if you're thinking of selling. And I guess for a lot of people, in fact, you were talking to one of our directors just before the show who's thinking of buying it, maybe his first time home. I think he owns a condo.
Yeah.
So what kind of advice then do you give for a lot of these young people that are moving into the area right now? It's a vibrant, a lot of them see these areas they want to live in that maybe are a little too expensive. What about for that first time home buyer now? What should they look at? What advice are you giving?
Two pieces of advice out the gate. Number one, work with a full-time realtor. Work with a realtor who knows Nashville and who's available. Who can be ready to jump on a house when it comes on the market.
Okay.
Because in that first-time buyer price range, we were just saying that it's, you know, there's a little bit more inventory coming out, but it's still tight.
Okay.
You
so
still need to move quick in that price range. So work with a realtor who knows what they're doing and can be really strategic in helping you get that home. And number two, go ahead and get pre-approved. Meet with your lender. Make sure you know what you qualify for, so that that's not a hiccup.
Right. So you know how much.
How much you're going to put down, what your payment's going to be, all that stuff.
So having a good realtor, and I have people, they shop around, they find a realtor they get along with or one they can trust, they get referrals for them. So having a good realtor like yourself then, you know, let's say you're dealing with someone like, you know, first-time home buyer, and you come across this property and you see what it's listed for, maybe $225.
Okay.
And now, are you someone that can get a sense that, okay, this is going to be a popular property, and you would give your advice to your buyer, you know what, if you really, really want this house, you're budgeted for $250, why don't you offer $230, $5,000 over what they're asking? Are people doing that?
Absolutely.
Actually offering more than what they're...
Yep. A lot.
Have you made that recommendation before just because you go, look, it may sound weird that you're offering more than they're asking, but I can tell you others are going to do it. You might want to just nail it right now. Yeah,
so the question is, how much do you want this house? Do you love this house? Is this the house? I mean, it's going to be your house. So whether I think you should do it or shouldn't is irrelevant. This is all you. You're going to live here. Are you comfortable with that? Because here's the deal. This house will probably have 5 offers on it, and it is going to take this price way up. Now, what will happen is, will this house appraise? We always are looking at that. So you've got a $225 house, and it may go up to, let's say, $250, even with that much activity on it, because that's a hot price range if that's in a good neighborhood or a popular neighborhood.
But if it only appraises for $230?
Then either, so if the buyer who gets it paid, contracted it for $250, they've got to figure out the gap between $230 and $250. Do they have another $20,000 to put in the deal?
Does that happen a lot where it goes way beyond what it was appraised? And does that not mean the appraisal was wrong?
No. I mean,
apparently the appraisal is what a home is worth, right? And if someone's willing to pay $250 and it was appraised for $230, wasn't it wrong?
The price that they're paying, or the appraisal wrong? So what the appraiser uses is past data. They're looking at the closed sales.
Okay.
And now they're doing some type of analysis too. It changes, yeah.
Okay.
And they may look at different things. So an appraisal is just an opinion of value.
Yeah.
It's that appraiser's opinion, and he's basing it off of factual data of homes that have sold, and he has to compare what's called that subject property to the comparables and determine, do those comparables support that $250 purchase price?
And that's what the bank wants to know when they're making a loan. They're going to go with what they think it's worth. Which I understand. That protects them.
Well, and gosh, the banks just got left holding the bag. So many people got left holding the bag in 2008 to 2011 when you had a house, well, someone's paying $250, we'll just appraise it for $250, but it was worth $230. Then the market went down. Oh, guess what? Now it's worth $200, and the bank's upside down 50 grand.
Yeah.
So it's... Everyone's still, even though we have been in a wonderful market for, gosh, 6-7 years now in Nashville, I mean, there's still checks and balances in getting it.
And I hope it doesn't go away. We don't want to fall back into that mess that we were in. That makes sense.
I've never understood why the checks and balances go away. Because in the 80s, I think there's a lot of craziness going on. And then in the late 90s, some craziness went on. Then the late 2000s, I'm going, don't the bankers learn? I mean,
you would think they would learn, but it's deregulation and people pushing for. Everyone's like, "Oh, get government out of it." Like a little regulation is good because I don't always trust.
Amount. Yeah, because I feel
there
like
has to be some.
I feel the pendulum swung way too far after the recession, and now it's just in a nice normal. It feels like a nice normal spot.
Let's try to stay there.
Yes.
Let's take a call from Ray. Ray, good morning.
Good morning there.
Hey there, Ray. What's on your mind, buddy?
I'm a fellow Miata owner.
Okay. Yeah, I got to beat up little Miata.
Is that right?
In fact, it's out back right now.
Yes.
Yeah.
But I I was interested in finding out maybe if you've got a piece of property and you want to downsize and you think it's worth or it's appraised or whatever for like $250 to $300, and you find something that you want to get out of Nashville and out of all the congestion, you're retiring or whatever, and you want to move out in the suburbs, and you find a piece of property that's comparable. Can you trade properties? I mean, is that still feasible, or you just have to sell and then turn around and buy what you want to buy?
You know, realistically, it's a sell and then buy. I had a friend who did that. He and his neighbor wanted to switch houses.
Oh yeah, I was wondering. I guess.
Yeah, and so, but one of the houses was worth more than the other house, and they both had to get mortgages. So at the end of the day, it was, now if they're true, this property's worth $300, this property's worth $300, it's all cash. Theoretically, you can just quit claim your deed to each other.
Why would you want to do that, Ray? I mean, I understand if you had a friend and it worked out perfect like she just said, but is that a big deal for you? Or why not, you know, you can just sell your property and then go find whatever you want, maybe for even less money than what you sell your property for?
Well, I was just thinking about maybe taxes and possibly some of the real estate fees and all that, maybe trying to save some money.
Okay, that makes sense.
But to your point on taxes, Ray, if it's an owner-occupied property and your gain as a single person is less than $250,000 and as a couple is less than $500,000, you won't have a capital gain on that property if you've owned it for 2 out of the past 5 years.
Okay, so there's that. And then as far as, you can always sell by owner, but just remind folks typically these days what realtors charge and how the payment is made. So
just to be clear, all commissions are negotiable. There's not a set fee. So we see it typically anywhere 5%, 6%, 7% would be a real estate commission.
And when you say negotiable, what does that mean? Meaning that someone could say...
So realtors cannot set fees because it would be antitrust. So we just can't set fees. So it's just a negotiable fee.
Meaning, so when you sit down with a client, at some point the client will say to you, all right, so I'd like to hire you. What will it cost me? Right. And you will say? So
I'll say, well, we charge, at the Wilson Group, we charge 6% to sell your house.
Oh, okay, so that's how it comes up. So you are setting a fee.
Yeah, as our company, we set our fee of what we charge.
Yeah, and that's fine, because you have to ask. Because the average, I wouldn't know. I don't know. Is it 3, 4, 5?
Right.
Now, and then the client says to you, well, Christy, that sounds great. How about 5% or 5.5%?
I mean, it's negotiable. A lot of times that agent's going to say, I have to talk with my broker. This is what the Wilson Group charges. Or, you know, well, if I sell it for, you know, in 30 days, we would do this fee. If you know, there's a variety of ways to do that.
Did you get into much haggling on that, or most people?
Not really. My thought on it is, if I can't negotiate my own fee, how in the world can I negotiate your property?
Right.
If I can't protect what I feel like I'm worth, then I'm probably not the right realtor for you, because clearly I'm not a good negotiator. I know I'm a good negotiator, and I don't say that cocky. I just know I can negotiate well for my clients.
Sure.
When they hire me, when they hire me, I am there to get them the most money in the least amount of time with the terms that are most acceptable to them.
Gotcha.
That is my goal for them. And so I think a good realtor is so worth what they charge.
And when you say you're 6% with your case, what happens oftentimes, there's 2 buyers and 2 real estate agents involved.
Yep.
So the one you're working with who's selling and the one who's buying pays their realtor, and you and 2 realtors get together?
Actually, so if I'm charging as a listing agent 6%, I'm offering half of that to a buyer's agent. Okay. When a buyer's agent brings a buyer to the table and we go to closing, they get half of that fee. So the buyer is not paying their agent.
They don't pay the agent.
Correct.
That's how that works out.
Correct.
See, it's basic stuff, but I'm glad you throw it out there.
Yeah.
Because, you know,
but if you don't do it all the time, you want to know. Like, I can't even imagine what you do. I watch you in the morning. I'm going, so how early do you get here, and where are you getting all your new, you know, what are you doing?
And you have to explain
we just don't know.
You don't know. Yeah. That's why you have experts at things like yourself. So listen, we'll take a break on that. We can take more calls. Ray and others, thank you, Ray, for the call. That's interesting. You know, if you can swap a house, it has to be a perfect storm, though.
It does have to be a perfect storm. It's just easier to sell yours and then buy the other one.
Gotcha. Well, the number is 737-7587. You can sit back and listen as we talk real estate, or if you have a question, just jump in and join us. We'll be back more with Christie Wilson right after this.
The storm